search of the team. Hope you're hello, Hamid. Hope everyone was able to take advantage of a few. I actually called a few things right in gold. Talked about being long against this return line, this throwover line. Maybe it's not done. Maybe we're going to make one more push before we head lower. But it came off. I was talking about 1520 was viable. We got to 24, and then silver. I said that 1850 was viable. We got to 46. Crude still looks ugly to me. The wildest thing yesterday was what happened to the dollar, and I think it's significant. While we were here during the ECB, to me it looked like a layup for a third drive, and then we got the big reversal. Not sure if it was just market disappointment with Draghi throwing everything in but the kitchen sink at it. Hello, Cheryl. But now I'd be very surprised if the correction is not underway because I look at weeklies on Friday, and the big reason for looking at weeklies is I look for 2-week reversals, which is something I teach. And this week's off number was 98.80. What was the high? Sometimes these off numbers, yeah, it got through the off number, went to 910. But when you look at the weekly, this week's candle, it's not closed yet, but it's closing under this candle where we closed 2 weeks ago. So it's called a 2-week reversal. And maybe we're going to head towards this line. I don't think we're going to get a dollar crash, but why can't we do this over the next several weeks or months, head towards this 94 range? Everyone with me and understand the 2-week reversal? It's simple, but if you watch the numbers during the week, at times they're decent to trade against. But the main use of it is saying what's the weekly direction. Everyone with me? Give me why if you understand it. Try it out. Every week, write down what are the off numbers going into the following week. And also, besides using it on weeklies, you could use it on any TF. Okay. So, Friday, there's no NFP. Looking ahead to next week. See this? Okay, so we're going to make new highs in, S&Ps and NASDAQ, but, you know, we're still going to have glaring. This will be the second lower high. So what I see on the weekly is even clearer on the daily. Potential for 3 drives to a top formation at new highs over this 8,000 level. Maybe it's into the Fed. I'll be attempting shorts next week. So you have divergence there on the daily. It's marginal divergence on the 4-hour. And I'd like to see one more high and the RSI stay under the 70 mark early next week. So anyway, it's a cleaner look to me, the NASDAQ for a third drive than the S&Ps are. Okay, it's almost a different looking chart, isn't it? Anyway, so I'll be looking for that. Don't know what to do with the metals right now. I knew it was there was a pop coming, but it may not be complete. We like silver, we look at it here that, you know, maybe this was the A part of it and this is the B part of it, and we could still get a C part of it. We'll see. Also, keep an eye on yields now that we've approached a pretty important level, 180. Talked about it yesterday. Had a good week. This was something that Steve talked about he was using the bonds. I was using the 3 drive that we had here down here at 140. I think you have a weekly buy signal on this. Yes, you do. So I don't know. I know some people are still looking for lower lows. Take out the bonds already did it. The 10-year, the 30-year has, the 10-year hasn't. This is a historical low. and that's going to tie in with one more thing I'm going to talk about. I think this rally in the end will terminate with the potential top that we have going on. And this again is a continuation. Actually had a 2 week reversal last week. And if you took that signal long end, you did pretty good. So I'm actually thinking that the end tops with the S&Ps and short term, I see a 2 here, say confirmed, diverging, and a new high up here. Actually, this measured, when I was talking about this formation here, this measures 109. So can we get up there? I don't know. It seems like it's starting to run out of juice, and we're running out of time if the S&Ps are going to fail. I know a lot of people are now talking 3,100, and I get it. I understand why they're doing it. It's something I talked about with this being an ascending triangle, breakout over 2940. So, that's 160 points, would give you 3,100. We'll see. So, everyone get ready. The promo begins, I believe. Yes, TN, green and red is up volume and down volume. Is this what you're talking about? Oh, I'm not even showing it. The red, I don't have volume up here. Green and red columns. Anyway, I'm sorry I don't understand the question. And I'm going to turn over to Blake. And perhaps Blake has some things to say about what we're going to do as far as the promo beginning. And Blake and I talked about it. I don't know what turned it yesterday, Blake. I think you told me on Skype it was just simply because there were a ton of options expiring yesterday. But that seems to be like, could that really be?
No, there were at the 110 level. That's what I think. I thought it was going to drift back up there, but what it was is it's interesting. There, everybody was extremely bearish following the ECB, and the it's basically QE forever and ever until till death do us part. But um, it was the idea that the ECB reintroduced quantitative easing. The amount wasn't as much as everybody thought it was going to be, but it was the
Okay.
idea that they were going to do it, you know, unlimited amounts. But what was really interesting is the way that the tier system worked, and the analysis that came following from banks is like, hey, wait a second, certain tier amounts are going to be are actually, the rates are going to go higher for some deposits and not others. Um, and in essence, what it ended up being is it ended up being for some, for some bondholders and institutions, it ended up being more of a rate hike. And so the euro turned around because there's going to be this, the market believes that there's going to be a rush of, to buy, some euro assets, and in turn to buy more euros. And so the euro, this policy change.
You want to put your charts up there, bro?
Oh, sorry, I was.
That's okay. And also, could you declare, at least for a while, a euro bottom based upon yesterday's action?
Yeah, that's the thing. Now we have this double bottom based
Yeah.
on what I'm seeing here, and we're at the bottom of this descending wedge, and now we have a bottom double, a double bottom in play. But more importantly, is because of this extreme policy change in from the ECB, and I was talking to a colleague in Chicago actually, who
Be careful. They're all gangsters.
yeah, he's
I'm one of them.
he's from England actually,
Oh,
but he lives
okay.
in Chicago as a
I
trader.
carry a violin case around, bro.
He's one of my, sorry. It's Friday, and it's Friday the 13th, and I'm yawning. Sorry.
Oh, is it the
Um,
13th? Oh, why?
it is. But he was just saying, policy changes a lot of times mark reversals in currencies, as as institutions now have to shift the way that they're positioned in portfolios. And so this may have been this shift in the ECB that is going to prompt a lot of adjustments moving forward. Now, what we need for today, in order for the euro to continue higher, is we need a weak retail sales number, which we're looking at today. Now it's hard to bet against the consumer, the American consumer, but I think we all will agree.
Is it?
One of
market forecasts for inflation.
Is it?
Is it what?
Hard to bet against the American consumer.
It has been notoriously. If you've been trying to sell against the U.S. retail sales, you found yourself in hot water over the years. But let me explain something. Bank of America and Goldman Sachs, which happen to be the two leading top forecasters for U.S. retail sales, both historically, they both see retail sales coming in weaker than expected today. And Goldman's Goldman. Bank of America, I don't know about you guys, but I think Bank of America has a lot of access to consumer spending data.
How about all the refis people could do now, Blake, with where rates are, and plus the appreciation of real estate? It's an ATM machine. It reminds me of 2008 that people just took out seconds and refied, and it was a cash machine. It's similar right now. Consumers that are fortunate to own a home that have appreciation over the last 9-10 years, they have they have a bank account there.
Yeah. But more importantly, I'm more worried about the consumer, the baseline consumer, right now. And I think, and like I said, it's probably
You're worried about me.
Okay.
I'm a baseline.
I'm worried more about like the average consumer. Okay. And the strength of the average consumer, because I do believe that they are powering this economy forward. And if we start to see that trend reverse, which could start as early as today, then you have a situation where we might actually continue to see some dollar weakness. And I believe the market's looking for reasons to buy the euro, and a weak retail sales number today could be the catalyst that continues to drive the dollar lower. So if you look at this is a chart of consumer spending. If you start to see this really come off, and this is just over the last year, you can see all of the consumer spending on retail sales and how strong that they are, core retail sales. If those start to pull back, we could, I think, continue to see a move higher in the euro dollar. And one that's really a standout right now is the pound. The pound broke its previous support. We've been watching this 123.70 level like a hawk, talking about it. I know Steve's been talking about it, I've been talking about it, and yesterday I said, hey, it's like a beach ball underwater. If it's not selling off, you guys hear me say this all the time. It's like, if it's not going down, there's usually one other direction to go. And in this case, the pound was not going down, and it just eventually was going to pop. And then you got the euro that, after the price action that we saw yesterday, the risk to the euro or risk to the cable was to move higher. And I think I have to go back and look at my analysis from last night. No, just we're just talking about the 123.70 level, just holding. It continued to hold, but the break above there, it kickstarted a real hell of a squeeze. You can see once it went. So I'm going to be watching the U.S. dollar here, and one of the things with the euro, just to reference the euro here, we're up against a little trend line that's held us since June 18th, I guess. No, June 26th, 27th, 28th, somewhere around there. And that trend line came right into play. We're knocking our head right up against it. So if we break into new highs today, I don't think you want to be short the euro at that point, because then the risk of this double bottom really playing out. We're looking at a move here that takes us to 112.50, and if that happens, then we have a big and this, I blogged about this yesterday on the week ahead video, I'm sorry, the chart of the day. If we break this descending wedge, then you're talking about a move that will take us back up to 115. That's a 38% retracement of this entire move lower. And that seems like a reasonable expectation. It's like, wow, you go from the euro from 110 to 115 and you think, oh my gosh, that's a 4% move, maybe, 4 let's see, that would be from here, 4% move. So that'd be a 4% move from here, but it would take us up to levels that we saw in January. Is that a far cry from is it out of the realms of possibility? No, I think it's extremely possible going into year end. We could see a move back up towards 115, and and then you could argue that the whole year we had a 500 pip range, which is also not beyond the scope of what could happen, I think. So I would be just paying very close attention today to the euro and how it does above the 111 level. And like I said, we break above 111.10, which is the highs from today, then that should enact a little bit bigger squeeze in the euro going into the weekend. I don't know if anybody's going to want to be looking for continued wanting to be short the euro if we're closing the week on the highs, especially with these big, and actually I guess the weekly candle is probably pretty ginormous right now. Yeah, I mean, that's a pretty big white candle, green candle if you're looking at them in green charts. But if we close up here at 111.30, 111.40, it's going to be pretty massive looking. So anyway, that's what I'm thinking right now regarding the euro, and that's how I'm trading it. And I'm thinking that we've got to see what retail sales brings us here in a little bit. So now there's been some other moves, pretty big moves too. The euro is under a little bit of pressure, a little bit of profit taking ahead of the numbers. You can see some profit taking here. Did I miss anything? I'm wondering why the euro's coming off, other than maybe pre data jitters, I think is what it is. Let's take a look at the yen pairs, because the yen pairs, the dollar yen has come up to 161% extension of this move, 78% retracement of the last down move, and we're in I would say we're in a ascending wedge, really. And a move below the lows could be, and this would go along the lines of having a weak retail sales number. If the dollar yen breaks down here, it could be fairly aggressive. But you got to watch the rest of the yen pairs, because the euro yen's knocking its head right up against 120, key resistance. Pound yen actually completed a double bottom today. If you use ForexAnalytix, we've been looking at this double bottom for quite some time, and we actually completed it overnight when we hit the 88% retracement. That doesn't mean it's going to stop. That just means that it probably, that if you're wondering why the pause in price, that's specifically why I'm assuming. The Aussie yen's just kind of holding up there. The New Zealand yen looks a little weaker. We're coming out of this little channel here, and wait, hold on. Hold on, I think I was seeing if there's some headlines that just came out. Canadian yen is knocking its head up against trendline resistance. So again, some pretty big moves pretty big moves overnight. The biggest one to stand out is the cable. And matter of fact, let's see if Stelios is here and see if he has any comments, because Amanda in our chat room said that that there was some news that might have provoked the pound to squeeze higher.
Hello, good morning.
Hey, good morning.
Hey. So yes, you are right, and Amanda's right. There is speculation. There's nothing firm or anything yet, but there is speculation that that Boris Johnson might have a shift in the whole. Basically, the main problem with the Brexit agreement, if it happens, is the Irish backstop. So the issue of the Irish border, and that's been the number one problem from the beginning. And there has been speculation based on sources, the usual stuff, that there might be a shift in the government, the UK government, in terms of how this gets tackled. Maybe there's going to be separate rules for Northern Ireland. Things might change a little bit. And actually, there was a headline that the DUP also agreed to some backstop changes that gave the sterling a lift, but then Arlene Foster denied it, and sterling didn't come down. So you make your own decisions on that. But bottom line is, there is more and more rumors and speculation that this Irish backstop may somehow get sorted. I can't be any more specific because I have no clue.
It's interesting. I've been forwarded a lot of different reporters and Twitter accounts that are reporting, and it's not getting like mainstream like news, that there are a lot of discussions and a lot of concessions that might be made, behind the scenes regarding the backstop. And it seems like there's a lot of positive momentum right now regarding Brexit, or a deal anyway. And so I think shorts are probably getting a little nervous here, I would assume. And I keep reading little bits and pieces, but to me, it like what you're saying, it is all very confusing, and it's like,
and remember, Angela Merkel a few days ago, or what, a couple of weeks ago, she also said let's say a positive comment regarding the backstop and regarding how things can be negotiated. So she, my theory is, when there's smoke, there's fire, I think. So the more we hear about talks being had, and maybe concessions being made, I think that the chances are rising. I'm not saying it's a done deal, not far from it, but I think, like you say, this is all constructive for the pound, and until they get denied, obviously, but if they get denied. So this is where we stand, I think, at the moment.
All right. And I hear Steve in the background. I know he's been trying to talk, and so we got to let him, we got to let the man speak. Problem is if he starts, he doesn't stop. So, so I have been kind of trying to contain him, but I don't think I can contain him anymore. What's happening, Steve?
I'm good, mate. I'm good. A little bit tired. This week has been long, but good.
Do you need some holidays, mate?
Oh yeah, absolutely. Absolutely. Tell you, I'm going to spend them in your house if you don't mind.
Sure.
So, Steve, you were trying to say something a little bit earlier about the consumer.
I'm in general, I've expressed that multiple times, and I don't think that, I know for a fact that Stelios agrees, and I don't think that anybody really disagrees besides the time horizon. This kind of economic, prosperity plan, can't last forever. I mean, Americans, along with other developed countries, but mostly Americans, because, America has been the recent, by recent, I mean like a century ago, like the biggest economic miracle we've ever seen, did realize that debt is a good thing when you use debt to build capital, and then you use capital to build a productive economy. But now we've transformed economies to mechanisms of consumption based on debt, and that is unsustainable. So Yeah,
Scramble to
the
save
consumer has
IPO.
been
Work
consuming
unveils
more and
promised
more
governance changes.
by going in debt
Scramble to save
further and
IPO.
further.
Work unveils promised governance changes.
Let me say on that I don't know if you've seen, guys, but for example, interest rate on credit cards has been at record highs, for example, in the US. Like, an average like 18.5%, 19%, and still people go deeper into credit debt.
What a spread for the credit card companies. Can
Banks
you
make
imagine
huge
that?
money. Yeah. While consumers continue to pay.
Yeah,
So.
that's what I mean. But what are the credit card companies paying for money? 0%, 1%, and charging 19%?
Yeah, but
that's usury.
Coach, you need to keep something in mind, which is very important. A credit card debt is not a mortgage. I mean,
unsecured.
It's completely unsecured. And one of the reasons likely that interest rates are climbing on credit card debt is probably bad omen.
Delinquencies.
Exactly. Because when do you actually increase the interest you're asking for an unsecured debt? When you either already have an increased rate of delinquencies or when you're afraid that it's coming, right?
Yeah. Anyway, been there.
Yeah, so I'm totally. This is off topic. I guess the reason why the euro did come off a little bit is Amanda said that Rain from ECB said that more rates cuts via tiering could happen. So that's what sent the euro a little lower. But there were buyers obviously.
Great lines, great chart, Blake.
Well, yeah, it's just
I like it.
I still think the risk is higher. So that dip might have been the dip for people to be able to.
What happened yesterday with the euro, Blake, reminds me quite a lot what happened a few weeks back with the Aussie Kiwi. The Aussie Kiwi, when we had event risk with both the Australian Central Bank and the New Zealand Central Bank, if you remember, it spiked at some point below the previous low. Which is, almost what happened here. Everybody that was looking, for more upside in the Aussie Kiwi was out of the market, and then Aussie Kiwi started climbing higher. So for some reason, I can't stop thinking that perhaps what happened yesterday is equivalent to that with the euro.
Yeah, it's quite possible. And hey, I'm going to pass it over to you. We're just a couple minutes outside of retail sales. Remember, guys, we have a special offer that's going to be released on Monday. It's a big changes are coming to ForexAnalytix. And if you're not part of the ForexAnalytix family, this is going to be your opportunity to get in at, what are some of the best prices of the year. This is I think our best seasonal offer, really close to. Anyway, enjoy it. And guys, I'm going to pass it over to you. We're just a couple minutes out of the news. Good luck today. Happy Friday the 13th. And we'll see you on the Sunday week ahead video.
Thank you, Blake.
Have a good weekend, guys. Blake.
You too.
Hey, Steve, don't we have a promotion where we're paying people to join?
Rate is not much.
Listen, if we were a central bank, we would probably at this point, right?
Yeah. We'll pay someone $40 a month just to hang out with us. Steve Martin did that in Lonely Guy. I mean, he bought cardboard cutouts for friends. So anyway, okay, I'm done.
So as Blake mentioned before, let's see
Central
what happens.
Bank Star Trek reversal rate on the bottom.
45 seconds. Still, anything to add during those 45 seconds?
Says not sure, Johnson.
No, it's been pretty quiet. Otherwise, I mean, we in the chat room we're talking about other stuff.
So what Cheryl likes that idea that it would be she'd like to be paid. We'll pay someone to use our blood, sweat, and tears every week. Don't worry, Cheryl. I'm sending you a refund for face. So look for that.
Actually, double that. I'll put
10 seconds before the release.
Okay.
9, 8, 7, 6.
So let's see.
Lift off.
Yeah.
Expected 0.2. Let's see what
I
we
bought
get.
some underwear last week. Let's see if it comes in there.
Oh,
Oh, there it is. There is your
US
underwear.
retail sales month of
core is lower, retail
Core
sales
is
is
lower
higher.
and- Yeah,
US
and
retail ex gasoline and automotive.
we also have a
0.1%.
slight revision
US
higher,
August
Sergio.
advanced retail
Yes.
sales plus 0.4%.
Okay, so
versus
let's see
plus
what that does to the
0.2%
market.
expected. Have you joined Group
The
N?
yen popping on it.
And
Dollar
skills plus
strengthening
hedge fund air racks to
somewhat,
after
but
wave of
nothing
redemption
really
requests. US
to
core
write
retail
home
sales
about
month over
yet.
month 0.0% versus 0.
Yen popping a little bit.
US retail control 0.3%
Yeah.
versus
To be honest,
0.3%.
having to do
Not
with
much.
having to do with the euro, Blake already mentioned it. You can see it here on the daily chart. He was looking at this intermittent descending trend line,
Retail
and keep in
sales
mind
ex
that
auto 0.0%.
this is a triple confluence of
0.1%
resistances, right?
retail
At
sales ex auto and gas 0.1%.
111.
0.2%.
111.10 to be exact. You can see why it's the 38.2 of this move lower. It is previous lows there, and it's also this descending trend line support. So yes, I agree with everything he said. A break above there targets these wedges descending trend line, which currently passes, let's say, from 112.80, and of course, every single day it's going to be moving lower. If for some reason we make it there and then we break higher, I'm pretty sure that we're going to see some kind of a massive squeeze. I mean, I consider it very easy that if that happens, that's a big if, of course, right? We can see Euro USD within a reasonable period of time trade back at 118. Not unlikely at all. So I'm paying close attention to that. Now, having to do with the cable, Blake mentioned that as well. If you remember, we kept saying again and again and again, 123.70, 123.80, major area of resistance. The recent price action was quite telling because we were consolidating but not pulling back from it. We've now broken higher above it. In my opinion, the only thing left is to see a daily, and since it's Friday, a weekly close above 113.80, 123.80, and we're headed higher. So, it is what it is. Now, having to do with the implications of that to the DXY, because don't forget that in combination, the Euro USD with the cable and with the USD Swiss, which is doing more or less the opposite than Euro USD is doing at the moment, consists of a big part of what the DXY is doing. That would point to lower prices in the DXY. Of course, take into account that, we can get lower prices in the DXY. I mean, we can move lower towards 96.50, and we will still not have violated the basic definition of an uptrend, which is a series of higher lows. But 96.50 is very, very important. We're still decently higher from there. So if you like it to the downside, there is still a decent risk-reward ratio for you to be lower, towards 96.50. Of course, what happens from there is going to be super critical for the trend, because if for some reason we break below that, I think that this prolonged period we've had of a very, very slow but steady updrift in the dollar is going to be over, in which case, even if there is some kind of a correction starting, given the fact that we haven't seen a decent correction in the DXY for quite some time, I think it can be a very, very decent one. And hence, when I was talking about a possible breakout eventually from 112.50, 112.80, who knows, depends on how fast it comes, because the trend line resistance, as we showed before, is descending in the Euro USD. A squeeze higher is the most likely scenario. An equivalent level, by the way, if we assume that the euro continues to move higher, keep in mind that there is an equivalent trend line for the cable. So, the short-term level of focus in the cable was 123.80, which we've broken above, and let's see if we're going to close above. But keep in mind that there is a much, much more important trend line to watch here, currently passing from like 127.50. The 200 daily moving average is also more or less the same point. You can see it here, this purple descending trend line. So assuming that the Euro USD is going to move higher towards that 112.80 area, it's quite likely, if it keeps overperforming, that the cable might be getting closer to, its trend line resistance. So imagine, if we get everything breaking out to the upside, the euro breaking upside from its descending wedge, the cable breaking upside from its descending wedge, you can understand that there's going to be major bullish implications, and then the DXY will have to move a lot lower. Even if that proves to be corrective, it's going to be, probably quite a hefty correction, one that will, provide the opportunity for people to make a decent profit being short the dollar, and probably in that case you will be able to make money being short the dollar more or less against everything. But those are just plans for one future possibility, because keep in mind that planning ahead is a good thing, but assuming that your plan is going to get to the point that's going to trigger is a different story. I mean,
Steve, can I interrupt you for a second? Sorry.
Absolutely.
We can hear every time the chat room goes bing, we can hear it on the webinar. So can you close the tab or something?
Yeah, I'm not using my headset.
It's okay.
Because you know why. Okay, let me mute.
Muted, yeah, that's it. Thank you.
Done. I think I did it. Yeah, okay. Yeah, sorry about that. Yeah, as you know, I still don't have my computer waiting for my graphics card.
Retail sales control group with 6-month MA.
Having said that about those major currencies, I usually don't focus so much about them, but I do think that it's worth taking notice of what's happening here. Let's go back to the USD Swiss, because the USD Swiss
furniture store is minus 0.5%, food and beverage store is minus 0.2%, gasoline stations minus 0.9% C.
As you see, the USD Swiss once again rebounded in a formation that looked quite clearly corrective. Now, of course, if you want to get more evidence, you would have to wait for a breakdown from this ascending channel, in which case I would be looking for a move towards a 61.8% fib at 95.88. That would more or less be this previous low here. So, that is another thing to consider. What's up, Coach?
US retail sales.
Oh, nothing. Just into commodity digestion.
2%
What did you eat? Gold or silver?
I haven't had anything yet, but yeah. Anyway,
I don't know if you've seen that. It's like a recent trend for rich people.
Oh yeah, they've been doing that for a while. They've been ingesting gold.
Yeah, I don't know. I love gold, as you know, but for some reason, I wouldn't want to be having, dinner or lunch.
A little gold dust on your lamb.
I'd rather put it in a vault, to be honest.
Yeah.
Instead
What's your address again?
In a vault, I said. I didn't.
I'm moving there next year. I'm pretty sure I'm going to move and try Athens for about 6 months or so next year.
You should.
Really?
You're gonna like it.
Okay. Is it okay with Stelios too if I come over there? Okay.
Of course.
My guest.
Stelios is going to give you his bed. I don't know about his wife. It's private.
You guys will help me find a place over there before I get there?
Say again?
You guys will help me find a place to rent before I get there?
Absolutely.
Okay, cool. Absolutely. All right. It's a plan.
Stelios has a basement, He keeps the dogs there. You can live with them. I think it's okay. Right?
I want to live in his baby pool. Put a tent. Put in the backyard. Put a tent up. Anyway, I'm serious about this.
Go ahead and do it then.
All right. I mean, once you're 66, and there's anything you want to do, you can't talk about it anymore. You have to do it.
I agree with you. And one more thing, keep in mind it's going to have a huge benefit for you, right? You won't have to wake up in the middle of the night to do face.
Yeah, what time is it when we start face over
3 o'clock in the afternoon.
Oh my gosh. That'd be a whole new lifestyle. Okay.
Yeah. So you'll be able to wake up normal time in the morning, have breakfast, go for a walk.
Take a nap.
Take a nap.
And then do face.
Yeah.
Oh, okay.
Let's
ask the community. Is that okay, guys?
I don't think they mind wherever you do the show from.
Oh yeah, that's right. You guys don't care. All right. All right. All right. So I have no guests today. I tried to bring Emma back and she cancels again. No, anyway, you know how many people have it, they just have problems and issues and I feel for them. Anyway, so no guests today, so you could take it to the end, Steve, and I have a great lineup next week. Back to back, Bookvar and Mark
Good.
Newton.
Oh, great! Actually, great.
Yeah, so it's going to be a great week
Bookvar.
for the middle of the month, and I think we're going to have some turning points next week. Actually, I'm looking. I don't know if you saw the beginning, but there's a nice 3 drive setting up on the Nasdaq 100. So.
Oh yeah, I heard that, and it is quite likely that we're going to get something equivalent with the S&P. Of course, it's very hard for somebody to try to fade it. I mean, once we broke above this consolidation, and then we broke above 2960.
Yeah, it measures like 3,100, but I don't know if the S&Ps are going to get there. But
just some extensions here worth mentioning. The 127% extension is indeed where you
3,100.
Almost 3,096 to be exact.
Okay, so you see that triangle you have there in purple or blue, whatever the color is. That's exactly what it measures.
Yeah.
Just take the diameter of it.
No. I believe you.
Anyway, that's what I'm stalking for next week.
Might be the case.
Retail sales disappoints. July web sales downward revised.
Speaking of which, obviously, we are like a breath away from all-time highs.
Yeah.
So, people can start, talking about a possible like double top or whatever, but keep in mind that, double tops and double bottoms.
Well, you know what? Maybe what we saw was a foreshadowing with what happened with the ECB, that at first people liked what they had to say and went with what the central bankers wanted to happen, and then later faded. So if they just go a quarter and their language isn't as dovish as the market wants it to be, like they're talking about, 2 more before the end of the year, we could have a reversal in S&Ps like we had in the euro yesterday.
Yeah, we could. I mean, if they go 25, as you said, that's going to be an initial disappointment. So if they indeed go 25, the market is definitely going to need a lot of rhetoric. If they go 50, even if the rhetoric, sounds, like normal, that, we did 50 because we want to be preemptive, but, it's okay. We might pause cutting rates or whatever. I think the market is going to focus more on the 50 base points of the cuts. But if
I think that everyone's waiting to fade the Fed after the Fed. I'm actually looking to have a toe in the water prior to the Fed, because it might just be too pat, and what you said, they might disappoint. So it's too pat to just wait and fade the Fed. I think you have to have a toe in the water prior.
Oh yeah.
If the chart's set up.
If you can get a price that will get you in the money, before the Fed, that's going to be great, because then you can have a risk-free trade. But the question is, what is this price? I mean, S&P and the Nasdaq are quite close to all-time highs, and there is no technical reason anymore, since, now that we've gotten ourselves above 2960 and we're trading where we're trading, it's a hard bet to say that it's not going to make it. Now, what looks a lot more bearish, as we've mentioned previously, is definitely the Russell, because the Russell has been trapped in this range. It's been oscillating in this 145 to 160 roughly range.
Yeah.
And we might see another rejection again from 160.
Or maybe they could even clean out the stops over the highs in May, and then it's done.
Yeah, but it's clearly underperforming. So as we've mentioned before, the Russell is a testament, is proof that whatever issues with the US economy are not only coming from the outside, because if that was the case, the Russell should be doing great. If if, as the Fed wants to claim and Trump want to claim, the only dangers come from abroad, like China and Brexit and whatever else, then we should be seeing Russell, still pushing all-time highs again and again, and the S&P and the Nasdaq underperforming more or less in the way that we see the Russell do. But the situation is the exact opposite. So that should be proof that the whole rhetoric is not genuine.
I have a 3 drive line coming in the NASDAQ 100 up around 8170-ish.
Let's see.
So draw a wedge line off that high in May and the high in August and see where it comes in.
US dollar to Japanese yen gains
There you go.
above 108.0.
That's what I'm looking for.
US retail sales.
Let's see.
We don't need guess. We're a guess.
Indeed. So something like this.
Yeah.
Is what you're looking for. Yeah.
Yeah. I mean, you could always get a throwover, but I'm thinking that's going to be an area to probe. Probe and protect. Probe and protect.
Can be the case, and we can easily see something like this. So an incremental new high.
Yeah.
And then lower.
Yeah. That's what I'm looking for.
Yeah, it can happen. And as you said, the chances, if we keep on appreciating with such a slow pace, the chances that the next RSI reading is also going to be lower again is, quite significant.
Yeah, as long as it's not over 70.
It doesn't look like it's going to be. I mean, the way we've been appreciating doesn't look like it's going to be.
Yeah.
So,
okay, bro. That's my guess.
Yeah, so it can end up being a 3 drive there. Now, I had a request since yesterday from a friend of ours.
Someone's asking about gold too.
Oh yeah, good, because we're going to go in the mental complex, so we're going to cover them all.
Okay, buddy.
So gold, if you remember, Coach, yesterday
shares climbed 12% after reaching settlement with insurers.
If you remember, Coach, yesterday I called resistance both gold, silver, and actually, we called support on the Euro USD as well. You remember we were actually entering the 15-20 area, and they said that be careful here because if gold is to turn lower, here is exactly where you should expect that to happen from. So I have to tell you that the fact that we rejected from there is beautiful because that was my plan all ahead. I mean, all along since we were trading there. So I do think that there is a very, very, very decent chance that we're going to retest these lows roughly at 1490 and actually continue lower from there. So simply put, and it's exactly what I was saying even before the ECB yesterday, below this support resistance area, I think you should be looking lower. And the same deal yesterday, I said, listen, roughly 18.5 is resistance for silver. We made it to 1844, so almost, and we seem to be failing. So same deal here. I think we can easily come down to 70.70, break below there, and then see more weakness, perhaps like towards 1680 or whatever. So I keep insisting the path of least resistance remains to the downside, but let me reiterate, in the short term. Okay, I mean, I'm not bearish gold or silver in the medium to long run, but in the short run, I do think that it's healthy if we see the correction take us lower from here. I never thought that it's sufficient. This pullback is sufficient in time or price, mostly in time, to be honest, because I would be satisfied with, especially with the pullback we got in silver. I mean, going from 1960 down to 1770 would be sufficient to me if we did it, in a slower manner, like a triangle or a slower path to the downside, like a zigzag, you know, that would take more time to unfold. But, you know, seeing how impulsive the first leg lower was, you know, I felt quite strongly that there is at least one more missing. And, you know, this is what I still think. Now, let's go back to the daily, because we had a question since yesterday about what's happening with palladium. And you can see here, we were talking about the possibility that this is a triangle.
So far, Trump is right. Contrary
In
to expectations of a tariff surge, Chinese import prices
the
tumbled
issue
to 12
here
year
is
lows.
that
Pound sterling to US dollar clings to multi-week
we've
tops
been
around
taking out the highs, right? I mean, we
post-US data.
incrementally traded above the previous high. Of course, it remains to be confirmed. I was looking to be short palladium since we were moving higher here, because, you know, the rebound looked corrective to me, but we never broke this trend line support. So, you know, I never ended up being short palladium. Good thing, actually. Now, are we truly breaking out from here? We might. A first important step is going to be to see how we're going to close the week, because, you know, it's going to be quite important for market participants as well. If we do close above 1600, I think that, you know, that probably indicates
what is most important in the week
that
ahead.
the correction is over, and, you know, we're headed higher. Upside targets from there, 1709, the 127% extension would be the first one. Okay, so, you know, I need to be a little bit more patient, because you never know. We still have a few hours on the day. If we reverse lower, that might have been a false break higher, but, you know, you have to respect the trend. I mean, irrespective of, you know, whatever has been happening here, I was never looking for palladium to crash lower, not yet, because the price action has been bullish. I was just expecting that what would happen here might have been something like this, right? That's what we drew a few days ago, that we might spend more time trading below like 1270 and 1600. So oscillating in this larger range before eventually we break higher. Because keep in mind that, look at palladium here. It's been producing two kind of moves: impulsive moves higher and corrective moves lower or horizontally. So I was expecting that if this is genuinely a triangle, we might see, you know, we might spend more time consolidating in it, in which case I would have loved to sort of break down from that ascending trend line support. Didn't happen, so perhaps that's it. Perhaps that's the correction. And another way you can look at it, if you want to look at it, you know, from a bullish perspective, is this. There you go. So, actually, let's make it green. What do you see here? Right? What is this? Textbook cup and handle formation. What is a cup and handle formation? It's a continuation formation. Okay? So 1600, quite important. If we break above it, the implied target from theory, to go a little bit into theory, would be this. Above 1900, as you see. Okay? So, you know, it is what it is. Important to see how we're going to close today. And here is platinum. Why am I closely watching platinum? Because it was one of the metals that was underperforming the other two precious metals, gold and silver. And recently it woke up. It gave us, like, you know, quite an impressive move here, which we hadn't seen in a long time. But most importantly, after a false break higher, it's been flirting once again with a very, very, very significant descending trend line resistance. You can see it here. So, you know, quite important to see what's going to happen from here, because if we do break above this, I think there can be a lot more upside for platinum. And I think that that might also be an indication that, especially against gold, we might see platinum overperform, at least for a period of time. And, you know, wouldn't make sense because it has been underperforming for so long. I remind you that for a huge period of time, platinum was, you know, well accepted as a more precious metal than gold, right? It was more expensive than gold. And it ended up trading at a very steep discount to gold. So, you know, perhaps the pendulum has to shift, has to shift the other way, at least for a period of time. Somebody's asking for me to comment on the FTSE. Yeah, absolutely. Palladium, yep, did that. Gold did that. Okay, let's go. Let's go to the FTSE. FTSE 100, there we go. So, we saw this double bottom here. You can see it. Once we broke above 7,200, we triggered that. Keep in mind, not coincidentally, 7,200 was also the level through which the 200 daily moving average was passing. So, you know, the 200 DMA was also the neckline of that double bottom. And once we pulled back clearly in a corrective manner, guess where we stalled? When we back-tested 7,200. So now we're breaking above this recent consolidation. So as I have drawn here, you can see, I see no real resistance that would hold us from pushing towards the 61.8 of this last move lower, which passes from 7,458. So that's what I think about the FTSE. I think that in the short term, it looks good for more upside. Now, it's always good putting things into perspective. So if I zoom out, what you have to ask yourself is, do you have a clear trend here? No, you don't. I mean, there is a decent likelihood that this whole formation might prove to be something like a rounded top. It looks like one quite a lot. Of course, it might prove to be a prolonged consolidation that's going to be resolved to the upside. If that happens, you should expect a lot more upside, because once a market corrects for that long and it decides that it wants to continue higher, probably it's going to continue higher for quite some time. Okay. But on the other hand, looks very, very similar to, plenty of rounded tops I've seen in my life.
Yeah, it looks like years of distribution.
Yeah, exactly. Years of distribution. Exactly. So bottom line, whatever you do in the FTSE, take any kind of action you want, but in my opinion, you should limit your time horizon to rather short. I'm not a scalper, of course. When I say short, I don't mean like 2 hours. Of course, you can do that as well. But I mean a few days at a time, simply because we have been without a trend since the end of 2016. And that is something that you cannot ignore. Okay? Also,
a stronger pound doesn't help.
Of course not. The fact that we broke above 123.80 is likely going to act as a headwind, for sure. And needless to say, although to be fair, Coach, if we assume that we're going to see a period that the pound is going to be overperforming due to Brexit developments, I have to assume that in this case, we will see both the pound and the FTSE perform well, because there has been so much negativity priced in both in the price of the pound and the stock market that a resolution of Brexit in a better way than the market is currently pricing in is probably going to propel both of them higher. So due to the specific circumstances, I can say that it's quite likely that we might see both of them do well for a period of time if we get news.
Yeah. Well, it'll probably take a 3,200 or higher S&P to drag the FTSE to take out what was its high in May of 2018.
7,900.
Okay, and that was over a year ago.
We got the high
In May of 2018.
22nd of May 2018. Yeah, so it's been like
Look
what?
how many new highs we've
months.
made in S&Ps without the FTSEs.
Yeah. And since we mentioned that, the situation with the DAX is not very dissimilar, right? I mean, the DAX has not been confounded to a horizontal distribution because we got this move lower from 11,800. But look at this. This was a rounded top. Now, we almost also made it. This was a head and shoulders formation. Its target, I don't remember exactly where it was. It was roughly at 10,000. We almost fulfilled the target. One thing is for sure. If you took that trade for the head and shoulders formation, you made money. I mean, irrespective of the fact that we didn't exactly make it to the head and shoulders formations target, I mean, if it wasn't your first rodeo, of course, once we had made it to, let's say, above 10,000, hopefully you had already taken some profits, reduced your position, trailed your stop loss, combination of all, most likely. And now we're rebounding again, but look where we are. I mean, we've still spent same deal. Just look where we were at the end of 2016 here. So, again, quite a, big period, a long period of distribution, as you said. Now, on the other hand, if we do break higher after such a prolonged, consolidation, I think we can move quite a lot higher from there. But that's a big if, especially if we consider where we currently are likely having to do with the business cycle. Now, of course, if they do it, if they manage to do it and, push everything back for a year until we get the US elections, which, that's what they're trying to do, then it's plenty of time for the indices to, to push clearly higher. Personally, as I've said before, I give it at best a 50% chance, but there is that chance. There is that chance because we know that they're going to do their best. I mean, they're going to throw everything at it, everything, monetary policy, fiscal policy, everything they have, like good news, deals, or, whatever is needed, whatever it takes, as Draghi said, plenty of years ago, they'll do whatever it takes. Okay, Coach, let me see if we have any leftover questions. Nah, so I think we can wish everybody a nice weekend. And you would want to check in Sunday night, Monday morning. There's going to be, there are going to be two different appealing offers for you to take and become a ForexAnalytix client. So I seriously hope you take advantage of that.
In my extremely accurate and humble and objective opinion, I guarantee this is going to help you. I'm not guaranteeing it's going to make money, but I'm going to guarantee that you're going to become a better trader, immersing yourself with guys like Blake and Steve and Greg and Andre and Amanda and Joe and Stell and really the whole team.
And Paulie.
Paulie, yeah. See, we have so many good people. I can't remember anymore. I remember when it was small. So I mean, the guys have really built up one of the strongest teams I've seen, and I've had I've been in the business 5-10 years, so it's one of the strongest teams I've ever been part of.
5-10 decades, you probably mean.
Yeah, almost 5.
Oh yeah, of course, almost 5.
Yeah, and when I'm 72, it'll be 5 decades.
You see?
Yeah, so not far away. All right. Well, I'm just going to hobble away from my laptop now and go put on a pair of Depends and put my false teeth in.
And
And-
go find the Greek diner. I mean,
Yeah.
it's amazing. In New York, when we were for the expo,
Yeah.
literally, I used, like, every morning I went to a different diner. You know, I wanted to wake up a little bit earlier so I knew that during the day, you know, I would be, you know, extremely busy. So at least I want to get some fresh air, you know, to get the day started. So I would walk every day to a different diner. Like almost all of them, they were owned by Greeks. I mean, I have no idea why.
It's like you didn't leave home.
Yeah, I mean, I have no idea why. I mean, somebody would guess that the Greek economy is just people having restaurants, but
it's a good diet that the Greeks have. One complaint I got from someone that I was talking about moving there. He goes, he just got bored with the food, Steve, that everywhere in Greece it's the same, unlike Italy and France where you go to different provinces and the cooking is different. Is he right?
No.
Okay. All right.
No.
All right.
He's probably right if he's, you know, if he had been trying the most touristic places, you know what I mean?
Yeah, okay, yeah.
Yeah. But thankfully nowadays, with TripAdvisor and applications like that, you can easily locate, you know, the best places around you and not the most touristic ones. So
okay. But you know,
no,
there's different Greek cooking, you know, like there's Mediterranean, you know, there's different styles and choices of cooking in other European countries. It's not lamb everywhere, right?
Oh, are you serious? First of all, lamb is not part of our regular diet.
That's more like Turkish.
Yeah. That's more Eastern countries. Yes, not that we don't have lamb, but people don't really eat that much. I mean, very little, I would tell you.
All right. All right. As long as they have pizza, I'll be all right.
But
anyway,
but I can tell you as a fact, not because I'm Greek, because I can tell you, you know, horrible things about Greece as well. I mean, get me started talking about the Greek economy, and you'll hear, you know, all the worst. But I can tell you as a fact that I've been to many places in many countries in the world, and I can tell you something that all my foreign friends that have visited agree with.
Yeah.
In Greece, you can find probably the best food on the planet for, you know, value for money. I mean, you can find excellent restaurants like French, Italian, whatever, besides, I mean, Greek cuisine at quite appealing prices, but excellent because there is, you know, huge competition having to do with
well, it's one of the last pleasures in life for me, eating. So you know how you could tell the difference between men who go into a bar that are 40 and over compared to 40 and younger. Before they order a drink, they ask for a menu. All right. So anyway, that's me.
Then probably I was born over 40.
Yeah. All right. So I guess that's a wrap. I want to thank everyone for hanging out with us again. Hope that we've added value to what you're trying to accomplish every day. That's our mission, to build you up, edify you, and have a great lineup next week. And everyone have a great weekend. And remember, don't just count your pips, count your blessings. And our community, we count as a great blessing in our life every day. So you're welcome, Hamid, Ingmar. Everyone have a great weekend, and let's kill them next week, okay? Oh, there's a joke from Greece. A 90-year-old person dies in Greece, and they say he dies really young. Is that true, Steve?
More or less, yes. I don't remember the last time I had like an aunt or whatever. I mean, the only two people I remember dying and people not saying they're very young are both of my wife's grandmothers. One died at 102 years old, and the other one.
Oh my goodness! Long candles in Greece. All right, buddy. All right. Well, I'm into a little extension. You know, when I had, I'll just wrap it with this story. after I went through all the cancer, treatments and surgery and everything, a friend of mine put me in touch with his rabbi who's a healer, Kabbalah stuff. And he said to me, Dale, I want you to make a contract with God that you're going to help poor and homeless people, even if you don't have a lot. And I said, well, Rabbi, I already do that. He said, well, I want you to ask God for 10 more good years and that you're going to do that. So I said, okay, Rabbi, okay, I'll make a contract with God. Well, 5 have passed and I'm ready to renegotiate with God because I wanted more than another 5. He lowballed me, the rabbi. Anyway, so everyone have a great weekend, and we'll catch you Monday. We're gonna have a great week next week. I feel it in my bones. All right, everyone. Adios. Steve, can you close it?
You can do it. You're the host. Yes,
Okay, I don't.
weren't.
Let me look for it. Okay. Oh yeah, end meeting. Okay. Okay. Bye, everybody.
Bye.
Love you guys. See you Monday.